India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. And I mean, the news flow keeps coming. There is always something or the other. It has been that way for the last 6-7 sessions. This morning, you're going to hear a lot of HDFC Bank. I can promise you that. I'm Prashant. Would be my colleague Sonia and Nigel. Guys, hi, morning.
Hi, Prashant. You stole my words, right? HDFC Bank is really going to be in focus. But apart from that, we have a whole market to trade and lots to talk about. So a long day ahead.
Well, that's right. And let's get straight to the action, Prashant. The street was bracing for this big piece of news, and it's finally here.
Well, more like arms open, right?
Yeah.
I mean, aa jao, ho jaye. I think it has happened. And, so I'll start with that, but I'll just a quick word on yesterday's session as well, because yesterday the markets took a bit of a break. It was, it was neither here nor there, a really ho-hum kind of a day. But this is, of course, on the backdrop of a very continuous up move that we've seen non-stop. Last week, the month of June, even, Monday was a 150-odd point up day. So yesterday, a bit of a break across the board. You look at mid caps, you look at small caps, you look at PSUs. The market didn't do very much. Now, there was a widespread expectation that HDFC Bank will release its June quarter shareholding in the next couple of days. We discussed this yesterday during closing bell as well, in the last hour of trade as well. And that happened yesterday. They released the data, the shareholding. FI ownership is below the requisite amount, after which MSCI will feel inclined to review their weight on HDFC Bank. In all likelihood, HDFC Bank's weight in the MSCI index is perhaps likely to double. That's essentially the news flow. As I said, it's not a shocker. It's not, out of the blue. This was well advertised. But the point is, there has been a fair bit of waiting and then, it not happening over the last couple of quarters. It's now finally happened. And that's the reason why, although it was well advertised and it was expected, I think this is important. Now, the HDFC Bank ADR, to give you a sense, last night, overnight reacted. It ended about 4.5% higher. The stock is important, right, from a market standpoint, because it's got 11-12% weight on the Nifty, and it's got about a 28% weight, near 28% weight in the Nifty Bank as well. So for both these constituents, both these important frontline indices, it's got an outsized impact. Now, the point is, even yesterday, HDFC Bank was higher, but you had every other financial name in the Nifty which was lower. And, the Nifty, of course, ended slightly lower. But I think today is going to be a slightly bigger reaction, maybe a 4-5% kind of a reaction, possible looking at the reaction overnight as far as the ADR is concerned. But I think it's not just about today. It is about the next several days, because there will be pre-positioning. These are just pure estimates based on MSCI benchmark ETFs, that there could be some $3 to $4 billion worth of buying which will be required to adjust to the weight, to the new weight in MSCI. Now, if you calculate the number of shares which are delivered every day on HDFC Bank, to account for that $3-4 billion worth of buying which may happen, it's basically about between 8 and 10 days worth of buying on HDFC Bank. And that's the reason why I'm saying it's not just today, it's beyond today. This review, of course, was only going to happen in August. But, as always is the case, there is pre-positioning, etc., which happens ahead of the announcement, the actual announcement, and of course, then there's the date of implementation, etc. But the point is, you get a reaction today, and then you basically get a bit of a floor here on HDFC Bank. More on this later, not just passives, but I think it is important for active fund managers as well. Although that $3 to $4 billion number that I'm talking about is just passive, but I think it has an influence on active fund managers as well. Now, overnight, handover was positive. S&P was up about 0.6%. Nasdaq is up about nearly 1%. The 10-year was down 3 basis points. The dollar index is down about a quarter. And there was some important commentary from Fed Chair Powell, who sounded very, very dovish. He basically repeated at a conference several times that the Fed is making progress on inflation. And he said that US has returned to a disinflationary path after the upside data surprises in Q1. This is important because he's now directly saying that Of course, there's acknowledgement that Q1 data surprises were positive. People were waiting for data to start to weaken, and it did not happen. But he's saying that we are now on a disinflationary path. It's got implications for what happens as far as interest rates are concerned. Now, just to circle all of this back to levels, Nifty yesterday made a new high, took out the previous high of 24,174, but could not sustain gains. It ended lower. Today, I think with, of course, a big thank you to HDFC Bank, there is that sort of, lift which the market will get. I'll start with supports. Nifty's support is at about 23,977, which is the 40-hourly exponential. The resistance zone, I would still say, is the previous high in about 24,236. These are very, very short-term, near-term levels that we're looking at. I mean, 24,236 is the more relevant number for you now. Bank Nifty ended well below the 40-hourly exponential moving average. That was the weaker index. Nifty was not the weaker index. Bank Nifty was. And here, the immediate support comes in at about 51,918. It's a 61.8% retracement of the recent up move. But I think here again, because of the outsized weight, the near 30% weight that HDFC Bank has, I think there's a bit of a lift here. The high of 53,181, I would imagine, is the immediate resistance for the Nifty Bank. And above that, we'll talk about higher levels. But I think outsized influence of that one name today perhaps will be seen. GIFT Nifty will come up on your screen. It's indicating a 130-odd point higher start. Sonia.
Absolutely. I mean, it's a big move, 130 points. And I think this is what the market needed, right? The market was sort of consolidating for the last couple of days, needed some trigger on the upside. And now, lo and behold, HDFC Bank has come through like a knight in shining armor and sort of taking the markets above that 24,100 mark. It's not that we didn't have the kind of momentum. I mean, the Nifty has been holding on to 24,100. The DII buying continues, albeit the number is a bit smaller. So yesterday there was about 650 crores of buying from DIIs. But FII selling is something that's noteworthy. So 2,000 crores of selling is what we saw yesterday. Global markets have been very strong. The Nasdaq has been at record highs for the second straight day. The S&P 500 has also crossed certain milestones. So things are looking pretty good on that front as well. But as Prashant was saying, HDFC Bank will totally be in focus today. The weight in the MSCI index could increase, and that could lead to inflows of $3 to $4 billion. Now, the weight in the MSCI index of HDFC Bank is about 3.8%, and post the rejig, it could jump to 7.2 to 7.5%. So let's see how that goes today. Of course, it will be the driving force of the market as we kickstart trade. But let's not forget that HDFC Bank has rallied also. In the last 1 month, the stock is up about 10-odd%. So may not be prudent to sort of chase the news at this point in time. But nevertheless, I mean, this is going to be a big focus area today. Lots of other stocks in focus. But in the IPO market, you have Emcure Pharma and Bansal Wire's IPO will be opening today. And of course, Namita Thapar, of Namita Thapar fame. So you have Emcure Pharma, which will be in the news. But the only problem that I have is, of course, the company is very strong. Fundamentals are good. Revenue growth has been pretty decent, actually. In FY24, if you look at it, the top line growth was around 11-odd%. And in this generic space, it's a big company. The only problem is the profitability. The net profits actually of Emcure Pharma have fallen. In FY24, it was about 528 crores. In FY22, if you hark back to it, it was sitting on net profits of 700 crores. So a little bit of problem in terms of profitability, but otherwise a pretty strong company if you look at it. So let's see how that one opens up today. But lots of individual stocks in focus, so we'll continue tracking all of that for you. In the meantime, the GIFT Nifty is indicating a very, very strong start.
Well, that's right. The GIFT Nifty is suggesting such a strong start, which makes it even more tricky, right? Because you'll have that HDFC Bank pop. So buying at the start, in fact, may be a little bit tricky. But let's run you through the top cues that we're going to be looking at. For starters, well, HDFC Bank is going to support. So the start is going to be well in the green in today's trading session, courtesy HDFC Bank. The Nifty Bank as well, that'll play out the weekly expiry. So that's the next big trigger because the second half of trade could be fairly volatile. And also the trading volumes in the United States. Today the markets are shut for half the day over there. And tomorrow, in fact, they're shut totally. So the volumes there will be tepid, and in all probability, you won't get any big shocker that will come in from the US markets as well. So that's another point to know in terms of the global setup. But the street is positioned for this news with regard to HDFC Bank. And I'm going to pull up three reasons why. One, on Valentine's Day, the stock hit a fresh 52-week low. From there, the stock has rallied more than 25% odd. And 1 year later, last year on the same date, that's on July 3rd, HDFC Bank made a 52-week high, and from there it corrected. Exactly a year later, it's going to make a fresh 52-week high on July 3rd itself. So that's going to be the crucial level which we'll breach in early morning trade. On the delivery side, there's been massive delivery-based buying on HDFC Bank in the last few days. In fact, in the last 1 month or so. And also, there was some bit of short covering, but then we've seen a big long build-up as well. So that's another factor in there. On weightage, well, HDFC Bank's weightage had come down and it had narrowed the gap with Reliance because Reliance weightage had gone up. Now, if you look at it, the weightage is back up to around 12.2% on the Nifty, and it's expanded that gap with the next largest weight, 2.3% odd. At one point in time, it had come down to around 0.6% odd. So the street is perfectly positioned for this beat of news. If the stock opens up 4-5% odd, I don't think chasing the stock will be a very, very bright idea because the street is already positioned for this. There's no surprise element in there. How are the FI is positioned? Well, on the long side, they have around 83% of their positions. Even if you look at it in absolute terms, they have close to 3.5 lakh contracts on the long side, while the clients are net short at around 2.5 lakh contracts. On the stock futures, we've been making this point that both the FIs and the clients, both of them are net long. But if you look at it from the start of this week itself, well, the long exposure on stock futures has come down by close to around 10% approximately, though net, both of them continue to remain net long. Looking at the options data then, a quick couple of levels should come up for you. 24,200 call as well as 23,800 put. Both of them were fairly active, which brings us to the levels. We're going to start off closer to around the resistance, which is at around 24,300. And that's a bit of a resistance zone. 24,300, 24,350. Near-term support at around 24,000 odd. 23,800 is the level from where we bounce. And the Nifty Bank, that's going to get a booster shot coming in from HDFC Bank. Can it go closer to around the all-time high that we made a few sessions ago? That's going to be important. But I think chasing the gap up could be a little bit tricky for today's trading session.
Okay, well, lots of big cues to watch out for. By the way, the S&P 500 has hit that 5,500 mark for the first time ever. So lots of milestones across the US markets as well. Let's not lose sight of that. But let's kickstart the trade with one of the best minds in the business, Rhythm Desai of Morgan Stanley, who says that this market is different from the previous bull market of 2004 to 2007 in at least 3 ways. He says it is characterized by macro stability, implying falling correlations with global equity returns, an incessant domestic bid and a market capitalization which makes it difficult to ignore for global investors. He says they prefer cyclicals over defensives and large caps over small and mid caps. He says they are overweight financials, technology, consumer discretionary and industrials, and underweight other sectors.
Okay, so money market views here. This is Pankaj Chitlangia of First Basis, who says that weekly chart indicates a slightly downward trend for USD INR, potentially dipping towards 83.33. He says resistance is observed around the 83.57 to the dollar mark, and an unexpected rise above 83.62 to the dollar may invalidate the bearish outlook for USD INR. He says positive outlook for India's growth and optimism about attracting more capital flows in the coming months should keep the currency pair below resistance levels and even fall below the recent established support of 83.33.
On the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a narrow range of 6.98 to 7.02% last week. He says the market remains supported in anticipation of FPI flows for the JP Morgan bond index. However, he adds, GSEC auctions saw a tepid response and cutoffs were lower than market expectations. He says the US Treasuries also rose with steepening bias owing to fiscal and inflation woes due to Trump's lead in the post-debate poll. He expects the 10-year benchmark bond yield to trade in a range of 6.95 to 7.05% in the coming week.